Good morning, Paul Georgie from Allendale, McHenry, Illinois. It's April 8th, 2010. Grain markets this morning expected to open lower. Corn 2 to 3 lower, beans 2 to 3 lower, wheat 3 to 4 lower after yesterday's sharp rally. The expectations here are based on several things. The outside markets are giving us some adjustments from yesterday. The dollar up 25, crude down about 90 as we speak. Gold is down about $2. We also had USDA export sales out this morning. Friendly for corn and soybeans. Corn, they were looking for 600 to 1150, came out at 1.3. The beans 150 to 350. That's and it came in at 444 million metric tons. The Chinese were the big buyers there of 225,000 tons, and that was all in the new crop. Wheat 200 to 600 came in at 533, neutral in the wheat. Weather concerns are continuing to circulate. The dryness in the southeastern part of the U.S. appears to continuing to be a problem. Concerns over that, possible planting delays, but we all know when you plant in the dust, your bins will bust, and that's the not too much of a concern, but they are talking about that here this morning. There is expected aggressive field work across the Delta. The Midwest is having still some problems, but the drier weather is coming here next week. It looks like we could have 7-8 days of dry weather now and warmer weather, so that could weigh on the market here today. There has been some damage in the wheat. The West Texas area is reporting some damage in wheat, but usually very light amounts of that. A light amount of damage anyway, so we're not going to get too excited about that supporting the wheat. Argentina, news out of that country, the labor unions in the crushing plants have settled their strike, so they should be back processing soybeans. Also reported here today that Argentina and China have settled their dispute over soybean oil, so that could give them an advantage for sending soybean oil out of Argentina, which takes away from our market a little bit on the negative side there. China yesterday was rumored that they are going to import corn, talk of 2 million metric tons, help support this market. There is possibly some truth to that. They're trying to support prices over there now to get their producers to plant more corn, so it may be seen down the road, but we don't expect that to happen here in the short run. Brazil also raised their production of corn from up to 54.1 million metric tons. That was 2.7 million metric ton increase. So a lot of things happening here. We also had jobless claims out this morning. They increased jobless claims 18,000, which the trade was looking for about a 4,000 drop in jobless claims. So that could be a bit negative here to the market. So a lot of factors going on. I think the technical action yesterday, though, is positive. We would expect probably an inside day today. That would not be out of the question. We do have a USDA report tomorrow morning at 7:30. That will dominate trade and positioning here today, as a lot of traders are looking for increased ending stocks in both corn and soybeans, and that will probably limit the strength in this market unless funds step in here and buy this thing like they did yesterday. In the cattle trade, things have quieted down there some. We've traded most of the cattle we need to trade for this week. The Southern Plains traded at the 99 to $1 range. Corn Belt 101 to 101.75. The product market is acting a little soft, however. Choice was down 32. Select, however, was up 55. The weather conditions that caused this problem in the cattle still is a problem, but we're starting to fill those pipelines at the packers, and the product is starting to get a little weaker here. That could cause some correction in the cattle trade, but right now we expect that we'll see prices to be supported on any kind of break in the, especially led by the April contracted cattle. The support in June cattle you got to watch for here. A close below the 83.90 area would be negative, and that's something to watch for there, as this trend has been up for the last 4 weeks. In the hogs, we've got cash markets a little weaker there today. The futures expected to open a little lower here this morning. The technical support in the hogs, with the kind of a reversal day we had yesterday, right now we should have June hogs got support around 83.50. If we took that out and closed below that level here today, that would not be good for the bulls, and it'd be something to monitor here very closely. I'd expect that there's probably quite a few stops underneath that if we closed below there. So we've got futures expected to open lower here this morning, 10 to 20 lower in the hogs and the cattle. Feeders are expected to open about 50 lower, because that's where the electronic trade is right now, and they're lower mainly because of the higher grain prices. If you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We'd be happy to answer those questions for you. We've got also, if you want to check out our homepage, we've got a preview of the USDA's report tomorrow. Joe Victor put that together for us. Take a look at that, give you some idea how you might want to be positioned going into this report. We thank you, and we wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.